Hello, everybody, and welcome to the Multifamily and More Expert Series, where we dive deep into a specific topic in the area of real estate, mindset, or anywhere in between. I'm your host, Jamie Gruber. My guest today is Anna, the REI mom, Kelly. Everybody knows who she is, but in case you don't, right from her site, she is a real estate investor, mom, speaker, coach, mentor, and syndicator, and we'll get to know a lot more about her as we chat. So Anna, welcome to our series.
Thank you so much for having me. I'm honored to be here today, Jamie.
Absolutely. So today's broadcast is brought to you by the Multifamily and More YouTube channel. This video, along with other interviews with great guests like Gino Barbaro, Vinny Chopra, Rod Cleef, Brandon Turner, Jay Scott, you name it, they're all on there. Check us out, youtube.com/multifamilyandmore, and you can see all of that content. So Anna, I wanted to get you on here with a specific purpose to talk about a post you had recently. But before we get to that, for those that may be under a rock somewhere and don't know who you are, can you give us a little bit of background on Anna REI mom, Kelly?
Sure. So REI mom just became this kind of, this tag, because REI and mom are like my two greatest things that I'm involved with and that I enjoy and I'm passionate about. And as you mentioned, I was in the corporate world for 25 years. I started out in private banking, and then I worked for life insurance, putting together insurance with hedge fund investments wrapped around them. And on the side, I started building a passive rental portfolio, really with the plan to retire from my six-figure-a-year job and to be home with my babies. So I started really heavily investing in rental properties in 2007. When I moved to Pennsylvania, my husband started his chiropractic business, and thought that I would, gain this wealth and six-figure passive income really, really quickly. And the economy changed, and we had a crash, and all these things that I didn't anticipate happened, and it ended up taking a really long time. But long story short, I developed this part-time real estate business while working and while raising 4 active children. And I was able to retire thanks to real estate, multifamily real estate in particular, in May of this past year. And now I'm just continuing to grow, my multifamily assets. I've syndicated some deals. I've done a bunch of joint venture type of units, and just really love and am passionate about passive income through real estate and what it can do to change people's lives.
I love it. Congratulations, by the way, on the recent retirement. That's awesome.
Thank you. That's
amazing. So you're living the dream as far as the real estate investment world. But like you said, not an overnight success. It takes some time to get there.
Yes.
Which leads me to this post, which actually, I'll be honest, I didn't see initially. One of my business partners, Grant Warrington, pointed it out to me and said, "Hey, have you seen this?" I'm like, "No." He's like, "It's amazing." So I read it. And it's funny it's like anything. When you first see those long posts, you're like, wow, it's a lot. But then as I was reading it, I'm like, it's over. It went by like that or both of them did. You have 2 posts out on this topic because they were just, I thought, insightful and kind of a call to action, if you will, for the industry, in my opinion. So
Thank you.
Titled at least the second one, "Peeling Back the Onion on the Real World of Investing and Success versus the Facebook World of Investing and Success." And I believe both were really thematically around that point. So I want to dive in on this. Let's start with this. What precipitated for you the need to post this? And I guess the secondary part of that question is, who were you posting it for?
Sure. So, Jamie, one of the things that I've been really passionate about for a long time, and since I retired, I've been able to really figure out, now that I've done this and I have this financial freedom, what do I want to do with my newfound retirement? My kids are now in school, and so I have the ability to continue to grow and to work until they get home from school. And what am I most passionate about? And one of those things is really helping other people, especially women, realize how they can take control of their finances and how they can build passive wealth through wise, conservative investments in real estate so that they too can live that life of financial freedom. And so I started a women's local meetup group, and I've spoken at several events, really geared towards sharing my story on, truly, I believe if I can do this with what I've had on my plate, I know anybody with a real vision and a plan can get there. It just takes a lot of time. And so I'm passionate about being real with people and real with women on what it takes to do it and how hard it really is. And a lot of my friends and my associates who I've met at these different events that I've spoken at and who are part of my Facebook group have said, Anna, I feel like a failure. Like all these people are doing these amazing things on Facebook and I just can't get there. And I've had men and women reach out to me. I mean, 20, 30, 40 people a day sometimes. Will you coach me? Will you help me? All these people are charging all this money to do coaching, and they're doing all these big events, and people are doing thousands of units, and I can't even get a deal done. So the number one thing was, as someone who has been there and done it the hard, slow way, I see that all this flashy stuff on Facebook is it's depressing to those that are taking action and feel like they're not getting there. And number two, a lot of it's fake. It's not the reality. And while I think people mean well, we hear a lot of this fake it till you make it. And we hear you must have a social media following and a platform. You must have some kind of authority in what you're talking to if you ever want to do deals and you want to build an investor database. And while I understand the sentiment of that and where we are in the world today, where marketing is more about who knows you than it is who you know. You used to have to know so many people to raise money. Now you just put out a bunch of, Facebook posts and YouTube videos and podcasts, and everybody knows you and wants to invest with you. And so it's powerful, the marketing. But what I saw is I kind of stepped back over the last year and started attending some conferences that, quite frankly, I had not attended or been a part of in the last 10 years of investing. I had just been too busy. So as I started attending some of these events and then being asked to speak at these events, I started to see the reality of some of the posts and claims of people who owned all these units. I own 2,000 units. I've closed all these deals. I own 3,000 units. And the very first conference that I went to, a really good conference that I like a lot, has a lot of people of integrity, there was this guy there, and he's like, I've been in the business a year, and I own 3,000 units. I said, wow, you have to tell me your secret. It took me, 13 years to get 50 units that I own 100% of. And, I thought I was doing okay. And he's like, oh yeah. Well, I said, well, what did you do? Well, I raised money for 3,000 units. And I said, okay, great. Well, what percentage of ownership do you have? Because syndication was fairly new to me, Jamie. I had heard of it, but I never did any of it until this last year. Wow. And he said, I raised some money for 3,000 units. And I said, great, tell me how much percentage of ownership you have in those 3,000 doors. And I don't really know, maybe 3 or 4%. I was like, well, wow, that's different than owning 3,000 units, but it's good that you're getting started. How much do you make? Do you mind telling me, how much do you make on those 3,000 units? He's like, oh, it's great. I'm making $3,000 a month. And I was like, wow, yeah, I was like, wow. So I can make that on an 8-unit property that I own 100% of. So why would I travel and do all this stuff and be a tiny little owner of all these deals that I might not ever see that money? And it just got me to questioning for myself and for the people that I'm teaching and mentoring how to do it the slow way, slowly, methodically buying their own and creating their own passive income. What's real and what's fake? And the more I spent time in conferences this year, the more I've realized that the vast majority of posts and speaker bios that I see, to be honest with you, say, I own this many doors, I've done this many deals, I manage this many assets, and most of them don't. They own stock in or some percentage of that. And that's okay. But I think for me, I had this overall sense of people are frustrated, people are confused. There's this mask that really doesn't tell the whole story. And I think we need a better, greater level of transparency and authenticity about what we own and what we don't, how much money we can and can't realistically make, and how long it might take us to get there and how to get there so that we can show people the right way and create the realistic mindset of what it's going to take to get there and what it might look like for you to get there in terms of income, experience, competency, and net worth that you might be able to develop by putting these deals together.
That's amazing. You said the word toward the end that was coming through my mind as you started talking about what's needed in the industry, what's needed from a standpoint of people. Did I lose you there?
Sure.
Oh. Did I lose you for a sec?
Just for a sec.
My apologies. But you mentioned the word authenticity. And I think that's the key word is, you mentioned like thought leader platforms. This is what we're doing, right? We're trying to build awareness for our brand, for who we are so that we can attract deals, we can attract capital, and we can further our real estate investment career. But the authenticity with which we go about that is very important to me. So, I mean, honestly, this being recorded and going to be broadcast out there, I mean, I'll put it out there. You know, for me, I started a couple of years ago, 2-3 years ago, investing. I own 100% of 2 duplexes. My wife and I own those and manage those. We bought a 16 unit here in Michigan. When we moved here, we own a quarter of that. We have 3 partners. I do actively manage that. So I have that experience, and I want to get to that because I think that's what you're really referencing a lot in your posts is, you know, what you can say you have experience with, right? So I have experience with actively managing a quarter of a 16 unit and 2 duplexes. And now I'm going to be a net worth sponsor on a small 22 unit deal, which gives me a little percentage of that deal, 10%, something like
Sure.
that. But I'll have experience as a net worth sponsor. I've never done that before. And it's, you know, a small enough deal where it's not crippling. But that's the reality. It's not, I have 42 doors. When you add it all up, that's what it is. It's 42 doors. I don't have 42 doors. I have portions of those that I own, and I have different roles in those, right? Actively managing or not actively managing. And I think that's what your post is encouraging a lot of people to do, including me, on this smaller thought leadership platform we've started so far. And it's funny because I try to think of it from other perspectives, like the ones who are, I call it gurus, if you will. I can see where the desire is there to overclaim. I get it, right? Like, you know, I want to show that I have more experience, but to your point, I think the folks that are out there promoting what they do, you know, the more authentic and the more real they are with what they're actually doing, I think, one, it makes everything better for everybody. It doesn't intimidate men, women, or whomever who are thinking I can never get to that level. And 2, I think you attract more with authenticity. If your goal is to attract, then authenticity gets you there, in my opinion. So I think your points are spot on.
And one other thing that really made me start thinking about this is because my background, aside from my real estate investing, when I worked at AIG, I handled state regulatory audits and our annual Reg D filings. So we put these products together where we took a private placement. It could be an investment in an apartment building, for example, and we made them insurance compliant. And we sat through with attorneys and SEC attorneys and hedge funds, and we read word for word PPM documents. And so I know the rules about disclosure, number one, and about what type of investors you can go to and what the advertising rules are. And so my first thought was, not only are these people saying that, you know, the sponsors have, own 2,000 units when they don't because they have ownership in. If you go out to investors and you now raise money and you claim that there's a level of experience between the operators of ownership, then you are basically saying to the investors, these people own this many units. That means they're 100% owner. So they must have cash, they must have net worth at risk in the deal, and they must have some experience and some competence, because that's what I own basically translates to the investor. And so I think people are putting themselves at substantial risk who are co-sponsoring deals that say, I own this much, when really they don't, because it basically becomes a disclosure issue with investors. And if one investor comes to you, Jamie, and one of your co-sponsors said, hey, I own this many units and he owns this many units, and let's say it's thousands, and yes, we have experience in real estate, and I invest with you because of that statement that I believe. If that deal goes south, the first thing I need to do is I need to complain to the SEC that, hey, I just heard this guy on a podcast tell me that he's raised money for 2 deals, but he's never operated anything. And I invested with him because he said he owned 1,000 doors. So I was manipulated. It was fraud. And that's a real risk that I think people minimize. And so not only do you want to be authentic and real, but you have an obligation to your investors to be completely forthright with who you are, what your experience is, and what your experience isn't, for the long-term health of not only that investor, but you and the net worth that you ultimately will put on the risk because of what you say and what you don't say. It just has to be 100% factual, and there can't be anything omitted like, I really only own stock in Amazon, I don't own the company, which is essentially what you're doing, with real estate. You own the company or you own stock in it. So I own units or I have ownership in those units. Those are 2 very different statements. And I think we just need to get really careful and clear about the words that we use to represent the experience that we do have and the experience that we don't have.
That makes sense. I love that. So yeah, that's a great point. Beyond even just the right thing to do, it's the legal thing to do. So that's a great
Yeah.
point.
Yeah.
So you mentioned a couple already, but if you could, I think in your at least your second post, you did a nice job of outlining, kind of what the language means. So if you can give a couple of examples of when people are reading bios, when people are reading about people they want to invest with, what are some key phrases? Because some of it may not be misleading. Somebody may think that they're saying they own when they're not saying they own. Read the wording, right? It actually says they have control of, or whatever the case may be. What are some things that you would recommend people really pay attention to from a claim standpoint, what people claim their experiences?
Sure. And I will say, full disclosure, I've tried to navigate this myself. So when people have said, hey, send me your bio, you're going to do a speaker bio, someone might have accidentally said she owns 2,000 doors. And I'm like, wait, I don't own. I have ownership in. So I try to be real clear, but we grow and we just have to fix it as we go and get better about the wording that we use. But for example, if I say I own, to me, that means I have 100% ownership in it. So, the 50 units that I own, 50 doesn't sound real sexy when you're out at a seminar where people are talking about having ownership in thousands of doors. But that 50 units alone that I owned 100% of is what allowed me to create a 6-figure passive income and a multi-million-dollar net worth and to retire at age 44. So I like to say I own those and that it is a small number because it shows people that it is possible and attainable without having mass syndication experience and without having thousands of doors to really create financial freedom with fewer doors that you have more cash coming out of that you're not splitting with other people. So when we use the word I own, it should really mean I own it 100%. I have ownership in X number of doors can mean a broad number of things too. And I think we just need to be careful, especially if you're looking for mentors or you're looking to invest with partners or you're looking to invest passively in a deal, that you hone in on what does it mean when somebody says, I have ownership in, because it could be a broad variety of things. And I'll give you just a few examples that I pointed out in my post, if I can remember them all. One, so I have 200 units that I have bought as a joint venture with 2 partners in the last year. Those 200 units, it's me and 2 other investors. We did it very similar to a syndication. So the primary money investor owns 70% of those units. As the operator and the asset manager, my other partner and I run that building. We cooperate it, and we each have 15% ownership in that deal. So it's not a significant amount of ownership, but because it's a joint venture, my ownership in those 200 units worth over $20 million produces me a nice 6-figure income every year that I own that. And so that's what's possible with I have ownership in. On the other extreme, because I retired in May, I was able to self-direct my retirement fund. So now I have a self-directed solo 401k. And that opened me up to having, a few $100,000 that I could invest passively. Because I believe so much in multifamily, I am investing in other people's deals. And this year I've purchased LP ownership shares in 1,500 units worth of property. They're worth a couple $100 million. If I just said, I have ownership in 1,500 doors, you would think, wow, she's got a lot of money. And even passively, she must have, millions of dollars to be investing in all these deals. I didn't invest significant money in those 1,500 deals. And I make significantly less money on those 1,500 units because it was bought with retirement funds than I make on the 50 that I own alone, or the 200 that I own with 2 JV partners, or the 250 that I have ownership in because I'm part of the sponsorship team on a syndication. So the number of doors shows you nothing about the cash flow that I actually have from those deals, right, the net worth that I'm getting from those deals, or the experience or competence I have by being involved in those deals. By asking the probing questions of how much of that do you own and what is your involvement and what is your role and how did you get involved in those deals, you'll find out that I have a lot more experience on the 50 by myself and the 200 that is a joint venture than I do even on the 250 that are syndicated. And I needed no experience, just some retirement money to get involved in the 1,500 that I invested in passively. So that's just kind of a personal example where the number of doors can mean a very different thing as to cash flow, net worth, competence, and experience. And to take it a step further, when we talk about people who are apprentices, sometimes you have apprentices who come in and say, listen, I want to get involved in the multifamily game. Teach me how to evaluate a property. And we send them to a book that tells them how to evaluate multifamily. And I will run numbers for you in a spreadsheet to kind of help you put together the business plan. And I'll go to my family and friends and see if I can raise a couple $100,000. Will you give me a small piece of ownership? And somebody that really wants to help and mentor that person may say, that's great. I'd love to help you get started. I'll give you 2% of the deal if you can do these things for me. And it's great. And I applaud these guys for jumping in and finding someone that can teach them the business and give them that experience. The problem is when they then go on Facebook and say, I just closed 2,000 units with my partners, and we are now implementing our business plan next week. Well, the guy that did a little bit of work because he's an apprentice that has 2% of the deal shouldn't say, I closed 2,000 units. I own 2,000 units and I'm executing the business plan. And that's what I'm seeing all over Facebook. So it's apprentices who are a small sliver of an owner. They might make a couple $100 a month on that deal and never see another penny from it. They're gaining experience. But when they come out and they advertise that they now have all this experience and they all own all these units, it just creates a picture that isn't a true picture of their net worth, their cash, or their experience or their competency.
No, I love that. That's a great point. And the people that I truly respect and follow, you'll see them talk about the team. Even the ones you know that are really doing big things. They are the lead sponsor on a deal or whatever. They still talk about we and this team, and because they value it, one, and two, it's true. Like you said, it's a team sport.
Right.
So on that point, you mentioned, I think at the jump, there was two things that jumped to mind, but I'm going to go this route. You mentioned at the beginning about who you were targeting, right? Especially women, but men as well, that might be intimidated by what's out there, what they're seeing. And I think it really does prevent them from getting started. Quick example, I run a meetup locally, and it's tomorrow night for me, just happens to be tomorrow night. And I message people like, hey, just looking forward to seeing you or whatever. One guy has RSVP'd a couple of times, but never shows up or never has shown up. And today he confided through a message, hey, I've been a little intimidated to come, but I'm going to make it. And I was like, man, don't be intimidated. Like, there's newbies, there's people with experiences in the middle like me. Like, there's kind of a wide range. Like, come, do your thing. But to your point, I think a lot of this, these claims, a lot of this pomp and circumstance that you see prevents people from getting started. And in my opinion, and I've said this before, and it's a hard, I struggle with being articulate with it, but we listen, especially when you start out, you might listen to a whole bunch of podcasts. Bigger Pockets has a great podcast, and you hear the first two or three. When you're starting to get interested in real estate, you want to consume all of them, and you hear all these mistakes people made, and you're like, okay, don't make mistake, don't make that mistake. But I think what happens is you eventually try to get the perfect deal, and you never get the experience of having a deal, right? So the reason I'm inarticulate with this is it's not like just go buy a deal. That's not what I'm saying to people. But at the same time, put the numbers down. Does it make sense to the best of your knowledge, and buy the damn thing, right? Buy it, and you will learn a ton more in that one deal, that one single family or duplex, than you will on 50 units, right?
Right.
So in that vein, if your post inspires as many people as I think it will, and really kind of dumbs down all the rhetoric out there, which is good, what advice would you give that person who maybe has been intimidated or has been watching this stuff and is saying, I'm not good enough, I'm not big enough, I'm not enough to do what these people are doing? 2,000, no way. Like, these people are epic and I'm down here. What do you say to that person who's got no deals, maybe a single family, maybe an accidental landlord, which is how I started, whatever it may be? Like, what advice, what 2-3 things, if any, would you kind of throw out there that for people to kind of get past that and move forward?
Sure. I think the biggest thing is that you need to know, for you personally, forget all the guys that you're seeing on Facebook, the guys, the girls, whatever. For you personally, what are your financial goals, and what's the reason that you want to get involved in real estate? And as someone putting on my private banker hat, I look at investments as a whole. I don't say multifamily is the only way, multifamily is the only investment, or so many units. I look at myself as an investor and say, throughout my life, what are the 3 primary goals of finances? 1 is to create income. 2 is to grow your net worth. And 3 is to preserve everything you've worked so hard in terms of your income and your net worth. So you have to ask yourself, where are you on that spectrum, number 1? And what are you willing to do to get what you need. And so if your goal is cash flow and you want to retire from your job, you need to focus on the types of deals, whether that be a small single or a duplex or a 4-unit or a bigger syndication, that's going to get you the most cash flow today, that's going to help you to get to retirement. Well, if cash flow is my deal, I'm not going to be going and investing in value add properties that are going to pay me no money for the first 2 years that I might see an upside in the future. I'm not going to go partner on huge syndications. If I have some money and I have no experience, I would rather see you go buy a small multi-unit on your own, a 2-unit, a 4-unit, with that down payment, and to just put yourself in there and learn on that rental property, because you're going to make more cash flow and have more control of that deal with less of a learning curve than if you try to go out there and go, I'm going to help this guy raise, money, when I don't know anything about the SEC. I don't know anything about broker-dealer rules on how to raise money. I don't know anything about multifamily, investments and whether they're a good or bad investment. And it might not be your best route to jump into big multifamily. So one is, know what your goals are. Is it cash? Is it accumulation? Or is it preservation today? Number two, you have to know, who are you as a person? What are your skills and what are your passions? What are you good at? And what is your risk tolerance? And those things are so important, along with how much time and how much money do you have to invest. So if you're really good, Jamie, at numbers, and you are really good at figuring out financing and putting deals together, but you never want to swing a hammer, you don't like talking to people, so you don't want to raise money, and you don't know a whole lot about renovations and value adds and all this stuff. And maybe you're like a solo guy. You don't want to partner. You don't trust people. Then I'm going to say, go it alone and buy your small units and build your wealth carefully and slowly. If you say, I love people, I love renovations, I love rehab, and I've bought small stuff and I want to get bigger, then you might partner with somebody else who's really great at numbers and really understands multifamily, and you might joint venture on something. But I think you kind of don't know what you're really good at until you get out there and start doing something. So to your point, you got to kind of get in the game, and you got to figure out, where do I get started and what niche and how can I add value? But first you have to know, what type of niche is going to fit with my personality, my skills, your passions, your time, and your money. And that's a different answer for every single investor, depending on, where you are in life. And so you have to get real about who you are and what you want. If I see guys doing, creating a business and a company, there's some guys I like a lot who, man, they've got huge dreams. They want to build a business. They're building this great team. Their goal is to create a company that goes after truly thousands and thousands of units. And they're working 70, 80 hours a week to build this company. For me, as a mom who already did 70 to 80 hours a week, and I retired, my number one goal personally is, I don't want to create a big company that I have to run, because I've given the 70 to 80 hours a week. I want to work 30 hours a week, continue to grow my net worth and to preserve what I've built, and build cash flow too. But at what cost? I'm only willing to work so many hours a week. So we have to know what's important to us and what we're willing to do and how much we're willing to work. And I think where your skills and your time and your passions meet your investment goals, that's how you figure out where to go in the space to get started.
That's amazing advice. Do you, right? Do you,
Yeah.
whatever it is you are, it's valuable. So do you, and figure out if you need help with the other things that aren't you, go get that help.
Right.
Incredible advice. It's funny. This is our first time speaking. I was a big fan before. I'm a raving fan now. I love the content that you're putting out. I love your message, and I really appreciate this. Where can people learn more about you, learn more about your company, just you in general?
Sure. So I have a Facebook page, which is Anna REI Mom Kelly, and a Facebook group called Creating Real Estate Wealth That Lasts with Anna REI Mom. And my website is reimom.com.
Great website. It lays out specifically your experiences. I went through it, and to your point, it's what you own, what you're invested in, everything else. So if people are looking for a blueprint or a template, you can just go right to your website, REI Mom, and get that from that. So great stuff. That Facebook post that I mentioned, you can find her, Anna REI Mom Kelly on Facebook, and read these two incredible posts that prompted this interview. Anna, thanks again for your time today. I really appreciate it.
Thank you so much. It's been my pleasure, Jamie.
All right. Have a great one.
You too.